Hello everyone and welcome to another edition of Bleeding Crypto's Market Update. It's been a really long while since I've done a YouTube video, and I thought today would be a very appropriate day to make such a video after the move that we had today and after the exuberance, denial, and, and craziness on crypto Twitter. It's amazing how emotional CT is. Through the years of being in crypto Twitter, one thing stays constant, that Twitter boys are just over the top. They are over the top. They want to believe what they want to believe, regardless of the facts, regardless of the data. It's just a desperation. When I read the comments, it's pure desperation. They need to believe it's going to go up. They need to believe it's going to go down. And they just pay zero attention to the facts. And the data, the facts, the data is pretty consistent. It's very consistent, very accurate, very well measured. And there's nothing really out of the ordinary that is happening. Look, guys, simple fact is we're either going to go up or we're either going to go down. In between that time, there are ways to measure the market to start shifting probabilities to one side or another. It's that simple. It's not very difficult to understand if you allow the markets to direct your decisions. One thing that is constant, if the majority of the people are bullish and they position themselves that way, the markets go down. If the majority of the people are bearish and they position themselves that way, the market's going to go up. This market, we're not in a bull market. So spot doesn't drive bear markets. Futures drives the markets. And I've been posting HyBlock data. I've been posting DCT, the heat maps and the liquidity information that he provides on his tool for months. HyBlock longer, because I started using DCT about 6 months ago, HyBlock about a year ago, and you can see the accuracy. But from people who follow me, do you notice a theme when I post those charts? Read the comments. Go back, guys. I don't delete any tweets or anything, so you can always go back. Just go back and look at the heat maps that I post, and look at the comments. Those are the funniest parts. People are always in denial. Oh, no, BC, that'll never happen. No, that's impossible. You're crazy. You're way too bear. You're way too bull. And the thing is that all I'm doing is following the data. If the data says we're going up, the probabilities are going up, then the probabilities are going to go up. Being that the futures market is driving the bus, is going towards those liquidations, because that's where the payday is. Your mom, your dad, your uncle, your neighbor, they're not buying Bitcoin. They're not going after them. They're going after the people who are heavily leveraged in the market, and they're wiping them out day in and day out. But if you don't know where to look, if you don't follow the data, hence you don't follow the money, then you have no business giving me your opinion, because you obviously have no factual information. What you say is just basically hot air because you have nothing to back it up. It's that simple. And yes, guys, most people don't like what I have to post, but yet most people in time, they come around and they either won't say anything, they stay quiet, or they say, hey, you know what, BC, wow, I didn't realize how accurate this information was. And they become, I wouldn't say fans, but more in-depth followers. One of the things about this data, guys, and one thing about the market in general, the market is not in a hurry. Only you are. I've said that for years and years. That's like my slogan. The market is not in a hurry, only you are. And that's proven by the data. When I post the heat liquidation maps, where that data is going to go, where the price action has a high probability of going, people expect it literally to happen within the hour or by the end of the day. I will get messages. Hey, it's been 7 hours. We're still here. I'm like, wow. Again, it just shows the level of desperation. It shows how uneducated most people on Twitter are when it comes to technical analysis. It is mind-blowing. All right, sorry guys, I had to take a swig of water here. It's hot. So let's do this. Let's dive into the technicals and let's see if even with this fake news, even with that nasty wick, did we respect the technicals? The technicals are the technicals, guys. The math is the math. The TA is the TA. It always seems to work out when you understand how these technicals can be applied to the charts. So let's start with this. Let's go with the, this is a clean chart. So all I have is my indicators. I've got my, EMAs, my moment. You know what? I don't need any of this. We're going to go just strictly on price action. No need to add indicators, to be honest with you. No need at all. Okay, let's do this. Let's look at price action. Let's go to the daily. We'll keep it real simple. And let's see what we have done. And let's make a case for the bulls and let's make a case for the bears. Simple. That's really, at the end of the day, guys, all you can really do. Make a case for either or. If you're going to try to root for your team, you're going to fall flat on your face sooner or later. Okay, so let's look at some of the resistance points that we had. So we put a high in here in July, which was on this particular chart, on the Coinbase chart. Now, keep in mind that every chart has a different number, but they're fairly close. 31.8. 31,862 on Coinbase. I think it's 31.8 on Binance and so forth and so on. But for the purpose of using the Coinbase chart that I have here already open, we've got 31,862. Then we had again a rejection right here in August. Then we had a really nice touch and rejection back here in September. Then we broke through it. And we broke through it with really good force, really nice conviction. What we didn't do, we didn't really backtest this area here. We came down close to it. I'm sure that backtest got front run and we kind of just went sideways. And then what did we do? We eventually came right back down and we backtested. Now keep in mind that this backtest had nothing to do with the ETF news. This is just simple, regular technical analysis. The check marks of areas that we normally come back to test, whether they're breakouts, we come back and do those bull back tests, or when we break bear, we come back and do the bear break test. Those are very simple, and it happens on diagonals, it happens on horizontal lines, it happens on EMAs. If you understand how to use EMAs in your trading, then you will know what I'm talking about. EMAs have the same power as these lines. They're liquid areas of fluid marks, indicators that allow you to find good probability of support and resistance, and they're constantly moving because they're constantly applying the previous data to the current day, and so hence why they're fluid rather than being something that's hard coded. And you basically, with time, you continue to strengthen that area up. Some people believe in diagonals, some people don't. Everybody has their own preference, and if you follow a certain rule set, and that rule set proves itself time and time again, then generally you want to adopt it. And that's what I've done. Through the years, I've learned from much smarter traders than I, and I've adapted some of their techniques, and I discarded some of their techniques that I felt they were either redundant or I just quite didn't understand them. And I came up with my own tool set. And part of my tool set, this is one of them. These support and resistance lines to me are very telling. They help me keep a good head on my shoulders, not get overly bullish or overly bearish when they validate or invalidate. So in this case, we validated the bull break. We broke, we backtest, we moved up. Perfect. Great. So this means that we're now in a new bull run. Okay, well, let's see what we've actually done. Have we actually broken through any structure that we've been reversing? All we've done is put in highs, higher low, another higher low. We hit a bottom here, put a lower low on here. However, from this lower low, we now started to shift the downward market structure into an upward market structure. Very disciplined. I mean, exactly the way I would expect it to go. And here, this is what I mean by discipline. You have a high, Right there. We'll just use this one. We came right down to 618. We bounced up. We put in a higher low. We then put in a higher high. We come down. We measure this move here. We came right down into the reload box. And look, we respected 706. We double bottom right on 706, and we moved up. We put in a higher low compared to this higher low. We've got our higher high. Now we have our third higher high. We had a really nice move here from this here. Look, if you guys do harmonic patterns, look, beautiful harmonic patterns from here to here. Look at that. Look at that beautiful finale to this harmonic pattern. After the harmonic pattern, what do we get? We normally get a nice deep retrace. After the deep retrace, we reset. And when we got this deep retrace, notice how perfect the TA works. For those who say, oh, no, TA doesn't work. Well, look at it. Before you say TA doesn't work, TA doesn't matter, you think this is a coincidence? We back tested perfectly here on this bull break. And then we actually fall perfectly. Imagine what needed to happen for us to get to this exact point for us to actually line up perfectly well with 786, respect it, not close underneath it, and at the same time do a absolute perfect a bull break test. That's not a coincidence, guys. So what happens now? Nothing changes. Nothing changes. We put in a high. Now, what I do is I put in a low. Now, this is what I like to do. Before I use a reload zone, I use a continuation rule. And I allow the continuation rule to prove to me that the bull is present. And if the bull is not present and it invalidates, then I go to a more longer term consolidation fib. So let me explain to you what I mean by that. The first thing I like to do is put a continuation rule. Continuation rule is basically a measure of that current move. And I want to make sure that if we're going to continue and we're going to bounce, we bounce off either 382 or 0.50. We can wick below it, but we can't have a candle body close. A candle body close below the 0.50 shifts the probability that we're going to go a little lower, and we're not going to bounce as quickly. Normally, when we respect this fib here, we tend to bounce quicker. Now, again, hear my words. This is one of the things that annoys me about crypto Twitter. Now, it's probably a language barrier because there's a lot of people that are not from the United States, so they don't understand what maybe means, or they don't understand what if means, or they definitely don't know what probability means. I mean, you could read from the comments. Most of these people have no clue what the word probability means. So if you understand English, or you're learning English, you should learn those key words if you're going to be in Twitter, especially on crypto Twitter, because nothing is certain. So if we bounce off here, we have a higher, again, here's that word that most people don't understand, probability. You may want to pause the video, go to Google Translate, type in probability, and then put your language and see if it will translate into your whatever language that you're listening to if you don't understand what probability means. And then probability is that it bounces and it moves higher and it puts in a higher high. That's what we want for the bull case. We want the price action to dictate whether we should be bull or whether we should be bear. We can't just look at this and say, oh yeah, we're definitely going to all-time high. No, it doesn't work that way. The market has validations. It's a measure of validations and invalidations. So if you break and close below here, we then change this. We then change this to reload, and we wait for this box. And guess what? If we break below here, okay, does that mean that it invalidates this uptrend? No, it does not. The rules of an uptrend, when you have a structure like this, when you have low, high, higher, low, higher, high, higher, low, higher, high, is pretty clear. If you break below the previous higher low, that starts basically the first step, in my opinion. It starts the first step of reversing or showing exhaustion in the market. Because if you want to continue the uptrend, you have to respect these levels. If you break one, it doesn't automatically mean, okay, that's it, guys, we're going to 23,000. No, it does not. I like the power of 3. I like the confirmation of 3. Whenever I put a diagonal resistance or support line, when I use a horizontal, when I use my EMAs, I like 3 touches. I like the confirmation of 3s. Do I always get a confirmation of 3? No, I don't always, but typically I do, and I look for them. So in order to invalidate this uptrend, in my opinion, using my system, 1, 2, 3. You break below this low, and the probability shifts massively that we're going to go down to 23 to 20,000, possibly lower. I don't know how low the market's going to go. What I do know is that every single person, 99, maybe 1 out of 10,000 people on Twitter are not looking for 25 as their support. Every single person is convinced, and they are, in the line in the sand for them is 25,000. It will not go, but this is where I want to buy. And you know what? That's fine. You can buy there, and you can put your orders there all you want. It doesn't matter what you want. It's what the market is going to do. And very rarely in my 7 years trading do I see the majority, especially a crypto Twitter, which is like, the bottom of the barrel, that they're right. Very, very rarely do I see the masses of crypto Twitter. So when I hear that everyone is looking for 25,000, I tend to believe that we're going to go much lower and break some hearts. Let me give you an example. Let me give just a quick example. I don't want to go back in time too much, but again, because I've been in this space for a long time, I remember how these things played out. I remember the sentiment. I remember the feeling. Right here, 2017. This is like a bouncy ball. Like, you remember those cartoons with the little bouncy balls? You had a bounce. You hit the bottom. You had a bounce, and you hit the bottom again. You had another bounce, and every bounce got lower, got a little lower and a little lower, and then it just stopped. Every single person, and if you are someone who says, "Oh no, not me," you're full of crap. Every single person thought this was the bottom. Now think about this. Think about how slow time goes, how slow time moves in crypto. Okay, when you guys are watching these charts every single day, you guys posted a week ago, you already forgot it. You already forgot it because a week is like 6 months. You have no recollection of what you posted a week ago. And most of the people can agree to that. Now imagine this. This is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks. 9 weeks. The 10th week is when we drop. 9 weeks of just doing absolutely nothing. Think about the price an entire week only moving $262, $198, $91, $35. That's all it moved. $35 was the end. Negative 35 at the end of this week. This one was negative 386. I mean, look at this one. Entire move, negative $12. I think this was the lowest one. My point is, nothing. This is it, guys. This is the bottom. Look at here's the most analysis said this. And it makes sense, but this is what most analysis said. This is pinching and coiling, and we're going to explode. We can't possibly go any lower than this. And it drops 50%. And it dropped 50%. Here, we'll never see 3,000. Once we were here, not here. We dropped here, and I remember Tone Vase, very smart analyst, very in tune with the market, follows Bitcoin, a lot longer than I have. It's written in the tablets that we will have to go to 12,000 because we never back tested 12,000 when we broke out. 1,200, and we will not go. And we were going to go lower. I remember I was on a podcast with Chart Vamp, and his line was we were going down to 1,800. They made a really good case. I was convinced. I really thought we were going to go lower. We never did. When we were here, we will never hit 3,000 in the $3,000 realm again. Never going to happen. 6 months later, $3,800. We went within $600-700 from that bottom. And if you go back in time, I'm not going to do that now because that's not what the show is about. But it's the same exact thing. People convince themselves that they know what's going to happen rather than allowing history to show you, first of all, because these patterns, as much as these people want to tell you they don't repeat, yeah, they kind of do. I've done the mathematical measurement of of all those moves, and if you've done it, then you know what those results are. They're within 30 to 60 days from 4 years prior. Every 4 years, within 30 to 60 days of happening. That to me, when you consider 4 years worth of data and you can get within 30 to 60 days in accuracy, that's pretty much repeating itself. To me, in my book, that's repeating. And that's why this, it doesn't repeat, it rhymes. Fucking that's a hell of a rhyme. But again, that's not what this show is about. This show is basically that I'm saying that to build context on what I'm trying to explain now. I don't know how low it's going to go. And I don't care how low or how high. What I care is when I look at the charts in the immediate time frame, today and within the next 7 days, do we validate or invalidate? And that's all that matters. Point is here, for instance, right now I am looking for this. Now, because I'm looking at the daily, I'm going to come down because you can see there's a big wick here. So I want to see, I'm going to go into the 4-hour time frame. Same thing applies. Did we come down and did we respect 0.50? There's 0.50, this line right here. And what do you know? What do you know? Look at that absolute perfect touch. Look, I'll zoom in. There it is. There it is. I'm not making this up. It's right there, black and white. Well, red and green, but you know what I mean, black and white. It's, again, there's, even with fake news, the price action still respects the math. And do you know why it respects the math, guys? Do you know why it respects these fibs and the way we measure the TA? Because we're not trading against other people. Why are we not trading against other people? Because people are stupid and they're emotional. So the market makers have intelligent AI algos, bots that are programmed to hit certain levels. They're programmed to go after certain liquidations. And yet, mathematically, everything fits for the most part. Not 100%, again, for the ignorant people who don't understand English that well, not 100%, most of the time, which is why we utilize TA to our advantage. And even then, sometimes we don't get it right. But we get it right most of the time if you listen to the TA. I know you guys are thinking, God damn, this guy insults people so much. I insult them for a reason, guys. I'm from a different generation. I'm 50 years old. I'm not politically correct. I'm not here to guard your feelings. You know what I mean? That's not me. And I don't like ignorant, stupid people. But I don't block too many ignorant, stupid people because they bring me, they put a smile on my face. And when I read the comments and I read how ignorant they are, I kind of like it. I kind of like it because it reinforces that I'm going to do really well in this market because I'm trading against really stupid people. So the more ignorant these comments are, the more secure I feel that, man, I'm going to be taking these people's money. Because at the end of the day, that's what it comes out to. I'm here to take your money. I'm trading against you. You're trading against me. Best man going to win. And your comments show me the level of intelligence that you have. So this is not a video that most people are gonna record. Most people try to be all nice, and when they get your following, they want you to follow. I don't. You can follow me or don't follow me. I don't care. I really don't care. I'm gonna tell you, based on my experience, what works out more often than not, and you can believe it. You can listen to it, or you don't have to. But you know what? I've got hundreds of people on my Discord on a daily basis. They're listening to me. I do recording 7 days a week. I teach this 7 days a week in my Discord, and you see the posts of the people, how well they're doing. You see that this system works. I'm not saying that this is the only system that works. There's a lot of great traders out there. There's people who have completely different systems. Let me give you an example. Castillo Trading. Again, incredibly smart young man. Incredibly smart. This system that he uses has nothing to do with what I teach. But does he win? Yeah, he does. Is he accurate? Absolutely. Does his TA work immediately? No. He emphasizes, guys, every day he emphasizes, guys, you gotta have patience. Guys, you gotta have patience. Guys, you gotta have patience. And I can imagine how many comments he must get on a daily basis. Hey, when is it happening? When is it happening? When is it happening? Because he's constantly posting, guys, you have to have patience. Guys, you have to have patience. So I can imagine behind the scenes how many DMs he gets like that. And he's really nice. He's just a nice guy. So he's not going to tell you guys are ignorant. You guys are stupid. He's not like me. I'm different. I'm cut differently. But I don't give a shit. That's just who I am. And I'm never going to change. I'm not going to change to please you. Because if I think you're stupid, you're just stupid. And if you're not, prove it to me. Prove it to me, just like I do with the markets. You prove to me that you're not stupid, and I'll give you that respect that you deserve. But until then, no, I'm just not. I wish I wasn't like that, but that's just how I am. Now, going back to the technicals of what I do know is we touched the 0.50. So now, and we did the back test here. We respected the fib. There's no reason for us to think we're going down until we get invalidated. Now, there's something else besides technicals that do have an effect on the market. And it's going to be news-driven events, and especially news-driven events that are fake. See, that's what most people don't understand. Again, this is why I call people ignorant. This move here was on the, this was a news-driven event. And I think it had to do with Grayscale, something with ETF. I don't know what it was. It was a news-driven event. And it wasn't fake. It was not fake. And yet, it gave it all back. Okay, it wasn't fake. Look at this. This was BlackRock's filing of an ETF. Look at the pump. Incredible pump, right? Amazing. Was it fake? Nope, it wasn't fake. It gave it all back. It gave it all back. Now, here's where I call people ignorant and stupid. We have a fake pump that is not real. And people want to think that this is the launch of the bull market. They honestly think that this is never going to retrace. This is from here we kick off to a bull market. It's crazy. Real news gets retraced, but a fake news that they're apologizing over, confirming it's fake, they don't want to believe it. That's what I call desperation. Now, even though this was fake, could it build momentum? I think it could. I think this has a possibility of building momentum. I mean, look at CZ. He built momentum, okay, and that's already been proven. This is not rumor. He built momentum using fake money. He got in trouble for it. The SEC went after him. They're chasing him down for that. But the point is, he took internal money, printed BUSD, and created the momentum for us to get up here. Now thanks to him, that's his problem. He's got to pay the piper, but that's not our concern. I don't care. That's his problem, not mine. I'm fine. But my point is that this could have the signature of maybe building that momentum. We came down and we kissed. 0.50. Okay, that's a continuation rule. Now we just got to go up higher to confirm it, and we've got to put in a higher high. We got this would be our lower high. Our higher low. This would be our higher low against this higher low, and now we're looking for a higher high. Great. That's the first step. I can't think 32, 34, 50,000, 48,000. I got to think right now. Okay, let's not get ahead of ourselves. Let's put a higher high, then put a higher low, and we move as the market moves, as the market validates. We change our thinking when the market starts to invalidate. Do we discount it after the first invalidation? If you want to, you can do that. I need more. This one's not enough. Even this one's not enough. However, every time you invalidate, it shifts the probability that we're going to go lower. Let me give you an example. Look at where this higher low is. Very, very key area we talked about. That was the bull break of this, the confirmation, and the 706 perfect touch of the fib. Double tapped on the daily. Double tap. Now, you break below this here. We've now invalidated the higher, not break, but close, better said. Let me use the correct terminology. We close below here. We've completely invalidated this higher low. And now we're back underneath this resistance. So you see how that probability now shifts. That, okay, we have a good chance now that we're going to see some ugly downward pumps. And it's ugly if you're not expecting it or you don't want it to happen. I see value. When I look at down, when I hear people about 20, 30, 20,000, 15,000, 12,000, I don't know if it's going to go that low. But what I see in my mind, that's a lot of value. That's a discount. That's me going to Under Armour and getting 60% off of a shirt. Shit, I buy 2, 3, 4 black shirts just because I know I'm going to use them eventually. And if I can get them 60% off, 80% off, I'll take it. I'm that type of shopper. I will buy 4 or 5 of the same exact shirt if it's on sale because I know that eventually I'm going to use it. I've been using Under Armour for 20 years. I'm going to continue to use it for another 20 years. Well, shit, if there's a good enough sale, I want to buy it. I want to buy it. So that will shift the probability that we may start seeing lower numbers. Now, you break the second one, and those probabilities increase dramatically. This is a confirmation that all of this is over, and we're going to go lower. The probability is now in the court of the bears. And typically, guys, if you look at price action, you look at when you lose levels, that's what tends to happen. Does it mean that could it do this? Could it go here and then bounce up and go to 50,000? Anything is possible. It's not about being possible. That's what most people don't understand about this game. It's not about being possible. Is it probable? That's the number one word that people need to understand what it actually means. Probable. Anything is possible. People ask me all the time, you think it's possible? Do you think it's possible? And they're not, it tells me that they're not experienced enough. They're using the wrong words. Anything is possible. It's kind of like when you were in school. You guys remember when you were in school and you would ask the teacher if you can go to the bathroom? How would you ask? Most people ask, hey teacher, can I go to the bathroom? And what was her response? I don't know. Can you? May I go to the bathroom? Yes, you may. You guys remember that? Right? It's the same exact thing. Don't ask me if it's possible because anything is possible. Ask me, is it probable? And I'll give you a much more educated answer because the probabilities, there's always a probability factor in most technical analysis. They may come a point where it's 50-50, but for the most part, by the end of the day, or maybe by the end of the week, you have a probability shift that it's leaning more to one side. It might be a period of 3-4 days where it's 50-50, but then it starts to shift and lean more to one side. And then it becomes probable for this, for a bear or for a bull. But it's understanding what is probable. Now, for me, because this was a fake pump, can we discern some discipline from it? Let's see. I'm going to put a line here, right where that wick stopped. Okay. Now, what I want to know is if this is all programmed, if this is all follows algos, does it show me when I snap a line there, when I look to the left, could I still see discipline? I don't know. Let's see. Can I see discipline? You tell me. You look at that wick that you saw me snapping on here, right? Look here. Is it disciplined? I would say, hell yes, it is. And what do I mean by discipline? Was it an area of resistance? Yes. Perfect. Yes. Yes. Was an area of support? Yes. 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 Not a little grayish here, a little up and down here. It wasn't as clean here. Beautiful candle bodies. Beautiful candle bodies. Great wicks. Look at this. Look at this first impulse here. How great it stopped. Look at these candle bodies here. So yes, even though this seemed like it randomly stopped, it very rarely stops randomly. There's always a case to be made of where these things stop and go, even on fake pumps. That just goes to show how disciplined the market really is, even when it looks like it's chaos. It's not always chaos. It's very, very disciplined. So now, in order for me to say, yes, we're going to go higher, we're going to go to 32, we're going to 34,000, what do you think is going to be an area where I want to see validation? Well, we've already established that this is a higher high against this higher high. We've already established that. So, and we've already established that we came down and we respected 0.50. Now, this 0.50 bounce does not constitute a higher low just yet. It's got to get confirmed. How do you confirm this higher low? By creating a new higher high. Do you know why? It's simple. Look, if we bounce here and we go up here, guess what starts to become a probable scenario? A double top. We're not out of the woods yet. We're not out of the woods yet. But you get above here and you close and you put that higher high and you start coming down, you've now confirmed that higher low. That higher low doesn't get confirmed until you put that higher high. That's my rules. It may not be your rules. You may have a very loose definition of what a confirmation is. And if it works for you, great. Awesome. Use it. Whatever it is, use it. If your grandmother's hip hurts every time a day before Bitcoin pumps, and it's proven, and it happens, 9 out of 10 times or 8 out of 10, call me, let me know. I'll use that system. I don't care what the system is, as long as it's proven and it works. Well, for me, that's my system. So I'm not going to say that we're not going to go to 30,000, but I am going to listen to the data. And this, I think, it would be a perfect segue for me to go over to this TradingLite. I posted this today, and I had people who very respectfully commented, like Mr. Anderson. He asked me a very, very, very valid question, absolutely valid question. Do you believe that we're going to see? What I remember what the question was about, seeing 20,000 before the next halvening. I think that's the question, and that's very valid. Here's the thing, and I answered him in I believe in a very respectful manner, and a very honest answer. I don't control this data. I only report what the data shows me. But here's a constant. And for you who have followed me for years and years, you guys can back me up on this. When I post these charts, first of all, they never happen right away. That's a given. Yet when I follow up on those posts, and I go through my feed, I look at those posts, I go down, I scroll down, okay, there it is, and I repost, and I put the before and after. It's funny how all the comments from the people, that's never going to happen, BC, that you're crazy, you don't know what you're talking about. And it happens, nobody says anything. Those are the people that I consider douchebags. Because if you're going to ridicule somebody, if you're going to talk crap to someone who's trying to give you the information for free, and that information, and you wanted to ridicule them, and that information does work and does play out, have the balls to at least say you were wrong. And a lot of the times, guys, if you'll see me, I go back to those comments and I put them on blast. I repost them. Look at this idiot who didn't believe now. And they're like, oh, that's so beneath you. No, it's not beneath me. I love to ridicule stupid people who don't at least admit that they didn't know what they were talking about when they were talking with such certainty that this will never happen. Guys, I don't control this. All I know is that I'm smart enough to know where to look for the data. And I'm also smart enough to know that this isn't 100%. But the probability of how often it happens is pretty good. And if I can find a probability where it's high enough, I'm going to continue to use the service. I'm going to continue to follow the data, and I'm going to pay attention to the data. I posted this chart a few days ago about a big liquidity grab right here. And look, fake news or not, we got here. Fake news or not, we stopped here. Fake news or not, we respected prior support and resistance. Fake news or not, we came right down to the 0.50 fib to the dollar. Again, it's not about fake news or erratic behavior. It's about, can you find the discipline within the charts, regardless of what the pump is regarding, just looking at the charts, not looking at the news, and can you make sense of it? Can you find the probability of where it's going to go? In my case, I can. Am I going to be right every time? No, I'm not. But if I follow the same system that gets to the same conclusion every time, most of the time, not every time, most of the time, then I think it's a pretty good system. I think it's a pretty good system. And let me show you this, guys. Let me go back a little bit in time on here. Let me go back a little bit in time. Back to last year, 2022. And so, again, some of you guys who followed me for a while, do you guys remember this? You remember when we were chopping here? You guys remember this when we were chopping here? And I was posting these heat maps. Go back to my feed if you don't believe me. Go back to my feed. Look, I say, guys, we got heat all the way at 26. We got heat here at 25. We got heat all the way down to 20,000. Oh, BC, this is the bottom. We're never going to go back down. You're crazy. We're never going to go back down here. Really? Really? Guys, there's always a reason. Everyone wants to say this time it's different. There's always a reason. I'll even give you a more recent one. You guys remember this here? You guys remember August of, this one right here, August of last year. This one was a fun one. And I'm not going to name any names. Again, I'm not going to name any names. But I'm sure the person listening to this or the people listening to this or even their followers can remember this. There was accounts here, right in here, that were telling everyone how we're going to 40, 50, 60,000 and even 100,000. Some people are calling for 100,000 by the end of the year. Okay. So I remember them specifically saying, and the funny thing is I've got screenshots. So if anybody says that they didn't say it, if that person or those people come to me and say, I never said that, I'll be like, bullshit, because I literally have a folder on my phone that says BSCT Twitter. And in that, I have screenshots of people that said, can you imagine the people that think we're ever going to see $20,000 again? Being that this was the low that we dropped down into here, into the 17,000 here. And they were like, can you imagine the people who think we're ever going to go to 20,000 again? And then we hit 15,000. I love that. I live for those moments. Because, again, it just goes to show you how no one knows. And everybody is always in denial that the markets can never go lower. Never go lower. This is it. This rock bottom. The bottom is in. Have you listened to crypto Twitter recently, guys? Have you listened to them? You listen what they're saying? That's it. This is it for sure. The 9th time. This is it 100%. There's no way we can be wrong. The bottom is in. You know what? It very well could be. But how do you know? How do you know with the certainty? I don't know. But you know what I do know? I know how accurate and I know the probabilities of what these signatures mean. These signatures right here are liquidity on spot. This is not future. Futures, you want to go to DCT trading or you want to go to HyBlock and you want to look at their data. That's futures. This is spot trading. This is where the price action likes to go. It likes to go after these liquidity pools. And if you look at the price action and you spend time and you look at how accurate this is, look at this line just recently. Look at this. Look at all this heat. Look at all this heat. Look at all this heat. Eventually it came and took it out. Did it happen right away? Nope. It took months, 4 months from the time they turned it on to the time they took it out, 4 months. But was the market in a hurry? Nope. Were you in a hurry? Yep. And that's why this data is not for everyone. This data is for 1% of crypto Twitter, because the other 99 are too stupid to understand how this data works. You can tell them how it works, but they won't listen. They need to see the results by Thursday. No, if it didn't happen by Thursday, then it's not. Sorry about that, guys. I just silenced my phone. Then it's fake, BC. You don't know what you're talking about, BC. But for 7 years, well, actually, I've been posting this for 5 years. For 5 years, posting these charts, very, very rarely do they not play out. Very rarely do they not play out. Yeah, and yet, no matter at what time of the season, what year I put, when I put it, people still say, I don't know. Maybe they're right. That's okay. But again, I'm going to follow the data that I understand and that I've utilized and that's proven to work. And to think that we're not going to come down here, it's crazy. There's a good case for it. Let me show you something real quick, guys. Okay, so this is the chart we've been working. We don't need any of this data. Actually, before I show you something on the higher time frames, let me tell you what's on my mind right now. I want to see the price break above here. Because here's what actually, not even here. Watch this, guys. Just to show you that I'm not a bear. I'm a facts data guy. Let's ignore this. Let's ignore this fake pump, because this is what it is, a fake pump. Prior to this, did we have the TA to what would validate a continuation, a move up? Now we came down and we touched this. This has nothing to do with the news. Nothing at all to do with the news. So for me, somebody made a statement, and I think it was Income Sharks. And he was 100% correct that eventually we were working our way up here. This just facilitated for us to do it quicker. I'm almost positive he said that. And he is 100% right. I'm like, damn, that's why I follow him. That's why I respect him. Him and I do not agree all the time. I don't think I agree with anyone all the time. But I respect them because they put time. They don't just spew crap. They actually back it up with their charts, with their behavior, with the way they trade, with their success. You know that they know what they're talking about. Just like with Castillo. His charts don't play. He's a swing trader. And his trades, man, are one of the most accurate out there. I respect the hell out of him, and I admire him so much because of the way by his record. So let's just ignore this pump for right now, just to prove my point of what I'm saying. If that pump didn't happen, I think we were looking. This would have been the line in the sand right here. This was fake. Okay, this was fake. So if this would have been the line in the sand, so if this wouldn't have happened, what I would have said is, okay, as we work our way up here, if we can close above here, we're putting in a higher high, and we have a greater chance to move up. And why here? Because if you look left, this will support. Not as clean here. Resistance. Look at this clean price action. When you look left, it reinforces why this area was important. So this would have been the line in the sand. If we can close today or tomorrow, or even today, honestly, I would much rather see it today. If we can close above here, it's going to increase the chance that we're going to go higher. We have an hour to go. If we close below here, does it invalidate it? No, it doesn't. But it decreases the amount compared to here. Everything is about give and take, guys. Validate, invalidation. Probabilities shift constantly. Why do probabilities shift constantly? Because the market has data coming in 24 hours a day, 7 days a week. As that data comes in, if you know what you're doing and you call yourself an analyst, then you need to utilize that data into your model, and that is going to change your model. Just like an EMA. EMAs don't stay in one position all day, every day, 7 days a week. Why? Because an EMA takes whatever period moving average you're using, and the new day adds to that data, the new week adds to that data, and it's going to be fluid. It's going to move around. Analyzing the markets is no different. You have to stay constant. You have to stay on top of this. You have to consider the new data that comes in. Does it strengthen your result? Does it strengthen your thesis, or does it weaken it? Does it bring validity to it, or does it invalidate it? Do you have to start over? Sometimes you have to start all over again, and that happens. And that's the job we signed up for. So right now, guys, today's closing is going to tell me better probability, less probability. Tomorrow we may regain it. Now it shifts. Now better probability, and now I'm looking for the next target. Now I'm looking if we can get close above here. Okay, can we put it a higher high, or do we double top? That's the next fight. It's that simple. Because if we close below here, I'm no longer looking at this here. No longer looking at this. Now I'm looking at, oh man, okay, now this is resistance. We close below it. Can we break over it before tomorrow's close? Or do we get rejection and do we go down? And if that's the case, then do we close below the 0.50? And if that's the case, then where are we going? Well, now I'm looking at here. Now I'm interested in here. Okay, let's see how low we go. Can we bounce off 618? Can we bounce off 706? Can we bounce off here? Then I look at 618. I go, okay, so can the 618 line up with any really nice support and resistance? So what I do, I go to 618 right there. I chalk a line. Oh, sorry. Sometimes it does. I don't know why. So I chalk a line there, and because I want this to be my first line of defense. I don't want it to go low. I want it to go high. I want it to continue. I want it to consolidate. So I snap a line, and I look to the left to help me increase my probability that this, not only 618 being a golden pocket, but on the price action, does it confirm prior history? Was this 618 in the past, this area, strong support and resistance? I don't know. Let's see. I don't know. I can't memorize all that. Yep, it was strong. It was strong support there. It was resistance there. Yep, resistance there. Okay, that means all resistance usually is good support. Yeah, there's history behind there. Okay, so that's going to be my first line of defense. Now, sometimes the 706 is much more clear. In this instance, you know what? 706 is not very clear. Just to go on the record, 706 is my favorite fib for a big reason. It's where we see the most pivots happen. Most pivots happen at 706. Those people who follow me on my Discord, the hundreds of people who are in my Discord, they can back me up on this, because like I said, I do this every single day, and we pivot more often than not on 706 than we do on 618 and 786. Okay, so that's where I'm looking. That's what I'm looking for there on this. So that's my TA for right now. Now let's look at also, you know what we didn't do? We didn't measure this move here. This actual move here. Does this have, again, besides the discipline of hitting this beautiful line, does that do anything? Let me do this. Let me trash all this. I don't need this. Let me trash that. And let's look at, besides that beautiful show of discipline right here, we came up on fake news and we hit that area perfectly. And then look where we went in. We went right into 706 and we pivoted. I can't make this shit up, guys. I'm showing it to you live. And we pivoted. So did we really do anything crazy? Anything chaos? Was there chaos? Anything erratic? No. We put in a beautiful higher high off of a perfect bounce of 786. We respected the uptrend. We like I said, we put in a higher high. Now we're looking for something normal, a normal pullback, until we started invalidating that. That's it. This here, you know what this reminds me of? This reminds me of the climb that we did on the weekly time frame back in January. Look, right here, where we started climbing. Look, we put a low, high, higher low, higher high, higher low. Barely made it above the higher high. And when we put a higher high so close to the prior higher high, what does it do? it tends to lose steam. And that's exactly what we did. Now we're in the cusp. We're in the cusp of a do or die situation, in my opinion, because there's a trader that I listen to, Brian Beamish, back here, this is like 2 months ago, he had said the possibility of coming up to here and doing a head and shoulders. And now, today, I was listening to a really good stream from Roman Trading, and he talked about that. He's like, you know what, guys, it's starting to look like head and shoulders. I'm like, oh shit, that's what Brian Beamish said, back in here. Why is Roman talking about it right now? Because he sees it too. Guys, these patterns, they come up. They come up. We don't know. All these traders they don't get together and compare notes, but you know what? These similarities and these patterns, they play out in the hourly, in the 4 hour, and the 12 hour. And if you are behind a string long enough, you recognize them. And he's 100% right. This could be the left shoulder, the head, the right shoulder. Is it pretty? No, it's not pretty, but it's there. It's there. And if this breaks down, what does that do? Look at this. If this breaks down, can we measure that move? Give me 1 second. Let me get out of this. Let me get the magnet out. This would be the neckline. Right there would be the neckline. Okay. So if that's the neckline, give me 1 second. That would be the neckline. All right. Now that's the neckline. I want to take this, put it here, and that gives me this. Now, can I make a case? Can I make a case based on technical, not based on Twitter, not based on my emotions, not based on fear because I'm scared that we're going that low? Oh my God, what's going to happen? No, none of that. Can I make a case for here? Well, let's see. We have a high here. Now, for those who are wondering, why am I putting the high there and I'm not putting the high here? Because this here was all a swing fail. So whenever I want to get really technical, I go off the actual high. This is, to me, was the actual high, and everything here, let me just go to here. Give me 1 second. Everything here was just a swing fail, was just a liquidity grab. Nothing wrong. If you want to put it here, guys, you're fine. This is just a preference. All right. You don't have to split hairs on this here. But this is how I do it. And I just want to give you my explanation. Now, I'm going to use a full fib. I'm going to use a full fib on this one here. No extension, just a full fib. Okay. So where does that get me? If this head and shoulder does play out and it confirms, that would get me right into here, which gets me into 786 and 886. Very powerful levels. It also gets me right into here. Look, there is if you guys, you don't have to, but if you do follow BPRs and fair value gaps, then you will see this right here. Boom. There's a BPR right here. Look at that. Look at that. There's actually another BPR right here on the daily time frame that is right inside of, where my cursor go? Oh, my cursor. I'm sorry, I gotta have multiple screens. There's a BPR that actually is right in, all right there. Is my magnet on? Yeah, my magnet's right here, right there, and right there. There's another BPR right there. So I would fill that BPR. Look at this big ass fair value gap. Actually, I don't want to put a bunch of lines in here, but you get my point. I can make a case. I can make a case to come down here, close this BPR. And for those who don't know what BPR is, guys, actually, for those who know what BPR is, you guys know how powerful it is. This is not a lesson on what BPRs are. This is just a tool that I use. And for those who understand what they are and they see the power that they have, are they 100%? No. Nothing's 100% other than the ignorance of Twitter. But they have a very high probability of bringing the price to those BPRs and closing those BPRs. So my point is that I can make a case for down here. I can make a case for us to go down here on the break of this head and shoulders. It is not out of the question. And then look what else, guys. Look at this. Let me remove this here. I actually just saw this. I didn't realize. Every time you analyze the market, you always find something new. Well, actually, it's not really something. It is something new because I wasn't considering this until I heard this from Brian Beamish, and then I remembered about it today because I heard Roman Trading's stream, and he talked about this again. Now that I'm actually utilizing the TA to measure this, look at this. Look at this, guys. Again, you cannot tell me you don't see this and get excited. If you don't get excited, you're dead inside. You are dead. How perfect does this potential Head and Shoulders finale neckline of this W? Perfect support, perfect resistance. I mean, this stuff is like, this is what we live for. This is what analysts. If you're passionate about what you do, this is going to excite you. If you look at this, go, this guy's nuts. Then you're not really an analyst. As simple as that. You're dead. You're dead inside. You're dead inside. Because I love this stuff. I love what I do, and I think that's why I'm able to do it 7 days a week. I am able to do the 7 days a week because I love what I do. I take great passion in what I do. Am I right all the time? Absolutely not. But I'm able to teach people. I'm able to help people make money. I help people to progress. I'm able to help people get ready for the next cycle. And every cycle, it just gets better and better. Will these cycles diminish? Yeah, I think they will. I think as institutions come in, the volatility is going to go down. You have to think about this, guys. When institutions come in, do you think institutions are going to risk the real assets, like the pension plans from unions? You think they're going to put them in a vehicle that swings 80, 90% in a couple of years? Absolutely not. So if you want crypto to be adopted by mainstream, you are literally rooting for the end of Bitcoin's volatility. But here's where I believe that when that happens, we are going to see an explosion in the altcoin market. We are finally going to decouple from the stupidity of following exactly what Bitcoin does. If Bitcoin moves up just a little bit, then the alts move. If it drops, then it drops. That's stupid. But that's the world we live in right now. So my hopes are when they kill the volatility, and they're going to kill it. That's why you say you got to be careful what you wish for. They're going to kill that volatility. They're going to tame it. But we're going to have all of these projects that are going to be able to run on their own merit. And so the crypto the asset class of crypto is going to live on for many, many, many years to come, many cycles to come. We may not have the same 4-year cycles. I don't know. I really don't know. But I know that, but I believe, and I want to believe that we're going to have many more years to make money in this asset class. I think it's going to grow, mature, and get better. And these alts are going to be forced to have real products, utility, and this is going to really blossom. And that's what I'm here for. I'm here to help you blossom. You don't need to pay someone like me to help you. You can do it for free. There's a lot of resources. If you have the time and you can learn on your own, I wasn't that smart. When I started to learn TA, I had no clue what TA is, nothing. So I had to go on, and my first paid service that I got on, and many people know this, was Dan from the Chart Guys. I signed up to one of his courses. I think I paid like $800, and I learned. It was great. It was awesome, but it wasn't geared for me. Why? Because I wasn't smart enough I had to re-listen to that shit over and over and over again. I just couldn't get it, and I couldn't really ask questions unless you sign up to his to his group and everything. And I wasn't ready for that. But I started getting on my own and learning and listening to other free and other paid groups as well, until I found my voice, until I found my technique, until I perfected my technique. Well, I'm sorry. It's not perfected at all. Until I perfected it enough that I can start utilizing it to my benefit. I think that's the best, because I'm still trying to perfect it. I'm still trying to learn. I'm still trying to pick up as much information as possible from people that are much smarter than me to help me and continue to grow. And I always try to give them credit. But the point is that's what I'm here for. Some people don't like my style and can never they don't stand me, and that's okay. If I'm not for you, then that's fine. But if you're used to tough love, and you want somebody dedicated 7 days a week, that's me. Give me a try. I have a month-to-month program. You can try it out. If you don't like it, cancel. That's it. Month to month. If you want to stay longer, you get a better discount. If you do quarterly, you get a better discount. If you do yearly, and I have people who do that as well after they tried a couple of months, they're like, this is for me, because I'm not this insulting in my own group, because it's different. In my own group, you're paying me. You're investing in yourself. You're not freeloaders. You're not beggars. I don't like freeloaders. I don't like beggars. To me, they're peasants. So if you invest in yourself, then I'm going to treat you with the respect that you deserve. But this is free information, so beggars can't be choosers. And again, I'm not cut for everybody. I'm a very different type of rough. I'm a very rough to follow and to listen to. But I can tell you, and hopefully you can tell, I know what I'm doing. I know what I'm talking about most of the time. I'm not going to be right all the time, but I can make a good case based on the data, not based on my feeling, not based on what I think, what I believe. No, but based on actual facts and what's going on in the market. So I'm going to leave the video here, and hopefully you got some benefit from it. Hopefully you understand my position where I'm at, and I'm not discounting that we're going to go higher, and I'm not discounting that we're going to go that we can go lower. As a matter of fact, how high can we go? We can actually go to 618 back under test, and I've talked about this in the past. And let me show you real quick what that looks like with data. This is what we can easily do. We could easily mimic we can easily mimic this. Easily mimic this. Right here, go to 618, put in a lower high, you got a high, low, lower high, and then put a lower low somewhere in here, or somewhere wherever the fib's gonna, wherever we land, we throw a fib from the swing, from the low to the new lower high, and we see where the low and the swing high is, and then we figure out. So say for instance, let's just say for the sake of argument, we put a lower high here, right? Then we go here, put in that low, reload, and we're looking for a touch maybe somewhere in the $28,000 area. But first, as my rule, I like to put my continuation rule first. I would do something like this first, and if we validate this and we bounce, then great, and we've shifted the trend in a macro sense. If not, we go to the reload zone, and then we consolidate and we see from there. So yes, this could happen. Yes, this is possible. But is it probable to where we're at? Honestly, I don't know. I got to wait for each level here to validate. I do know that, in my opinion, if we can break above here, about 32.4, and we close above here, the probability in my eyes and the way I view the market and the way I use my technical tools is that 80% we're coming here if we close above 32.5. We close above 32.5 and we find acceptance, 80% we're going here. But that 80%, to me, if we don't break above it, 80% we're going down to where I was talking about. 80%. That's how I trade. You don't have to trade my way. You don't have to follow the way I trade, but that's just my opinion. You're here for my opinion. I'm giving you my opinion. All right, guys. Everyone have a really good day.